Welcome back to ETF.com Live, the video edition. My name is Dave Nottig, Managing Director here at ETF.com. And we had a great question today, which is one of those simple questions that I think is actually really important to understand the nuances of. The question was simply, how do I, as an investor, get charged the expense ratio of a fund? Now, the short answer here is pretty simple. You don't. It actually gets rolled into every night's net asset value. But understanding what that means, I think highlights a lot of interesting things about investing in any kind of pooled structure, whether that's an ETF or a mutual fund. So if you think about an ETF as a company or a mutual fund as a company, which it technically is, every day they close their books. So they own a bunch of things. They own all the stocks in the fund, perhaps. They may have some cash sitting around, but they also owe some things. They have liabilities. That might just be dividends that they haven't actually distributed out yet. It might be a bill that they got from the fund accountant that they haven't paid. And in fact, the management contract that the advisor is due, that's one of the things that they have to keep track of as a liability. And like every other company, they're going to try to keep track of that with as much accuracy as possible. In the case of a mutual fund or an ETF, every night they accrue some small charge on their books for all the liabilities that they know they owe that they might not have written the check for yet, just like any other set of books. So every night, some small amount gets put in there as an accrual against that liability to eventually write a check to the management company for the services of running the fund. Now, that doesn't show up as a charge. It doesn't show up in your brokerage account as somebody taking money out. It simply gets rolled into every night's net asset value, along with, for instance, all the dividends that you might have received overnight, or if they're owed something, say, from a counterparty that they might be doing business with, that all gets accrued too. So every night those books close, and that's what we call the net asset value. Now, how does that relate to you as an ETF investor who might be trading intraday? Well, all of the participants in the market know this math. They know that every night the net asset value, all else being equal, will get notched down just a tiny bit because of those accrued expenses. And they keep that in mind when they build their hedging models and when they wake up the next morning and figure out how to trade that ETF so that you can participate in the market too. So it's a beautiful structure. It sort of embeds all of those things into a single number everybody understands, which is net asset value. And as an investor, you never have to worry about whether you personally owe any expenses. It's just going to be baked in. Thanks for listening. We'll see you next time.